Hello traders, welcome to QuantSap. In today's session, we are going to understand how to read participants' data in QuantSap. Now, if you are new here, subscribe to our channel, and if you are new to QuantSap, you can sign up to QuantSap. I'll put up the link in the description. As you'll sign up QuantSap, you will unlock 20 plus free tools which will help you in your options trading journey. Now, if you want to understand what kind of tools and strategies QuantSap is providing, you can come here in the learn section and you can go in the video library and you can check out the multiple videos and strategies how particularly the QuantSap works. Now, if you're having further doubts or queries, you can come here at the support section on the profile and you can write us or you can WhatsApp us and we'll try to help you out. Now, when we talk about participant data, we are just identifying like what kind of investments we are seeing. Okay, if the market is going up, which of the participants are taking it up? If the market is going down, which of the participants are taking it down? We need to understand that. Now, there are two types of participants which we see. Okay, so we are seeing DII and FII. So, FII is the foreign institutional investors. Okay, DII is the domestic investments. Okay, so domestic institutional investments which we see is the DII. Now, whenever you see that FII and DII generally both are having their own perspective, they are having their own agenda and their investments are also having the same perspective. So whenever you see the data, you can make a view or you can identify that what kind of a situation we are seeing and who is creating that situation. Now, if you come here at the tools, you can see the participants data here. Okay, just a second. So as you can see, the participant data has come here. Okay, so this is the future index. We can see the data in options. You can see the future stock index. You can future stock data. You can see the option stock data, and this way you can identify. Okay, so we'll just take last 2 months data. Okay, so you can see the last 2 months data here. Okay, so frequency is on daily and the relate is the open interest. So simply by adding series, you can just, you are having FII long and FII short is there. Okay, so you can see the FII data as of yet. Let's just add domestic also to get a view. So you can go for the domestic long, domestic short. When I apply, just a second. Okay, with that we'll add FII long also and FII short also to compare. Okay, so now we are seeing 4 types of data. Okay, so 4 data which we are seeing is, one is DII long, DII short, FII long and FII short. So this way we'll identify that how much of the short we are seeing and how much of the long. Now, if you would have observed in the past given few months, we were seeing that Nifty was in a bearish trend. So as you can see that this particular purple color is FII short, green color is FII long, DII is grey short and DII long is blue in color. Okay, so if you can see in the past given time, you can see the blue and the, just a second, I'll just, so as you can see that if we talk about the longs, okay, blue and green, you can see the blue and green are very less at all the levels. So if we take a blue and green range, it is somewhere till here only. Okay, before earlier on we were seeing, but from here when it stopped from here, you can see there is only shorting happening. You can see there is selling, and then overall we were seeing very much of the selling. So you can take the numbers here, you can identify numbers and you can compare. Okay, but if you see it in a graphical representation, you can see that there is FII selling happening very heavily. Now with that you can see that DII is also selling. Why so? Because see, generally whenever the market is having participants, now FII is also a participant of market, but they are not obligated to stay in the market. If they want, they can withdraw their money anytime, and if you are having any kind of a losses, if the FII is removing the money and the prices are going down of the stocks, so the market is not responsible for this, because that is a market risk or a systematic risk which you can face. So to avoid facing such market risk or the systematic risk, to avoid this, you can check out this data and identify when the FIIs are buying, when the FIIs are shorting, when the DIIs are buying and when the DIIs are shorting. Now if you are seeing this whole past 2 months, if you are seeing selling is heavy, we are seeing only selling mostly in the index. So your particular trade setup or your particular identification of the trend which also should be on the selling side, because we are seeing bearishness overall in the market. Similarly, if you would have seen that you were seeing good buying in the particular participants, you were seeing that people are buying there. So there you could have initiated the buying kind of a strategies, because there we are seeing bullishness. Now if we just go and check out the stock data, okay. So if we put up the stock data again, I'll just put 2 months data, last 2 months data, okay. With that we'll add FII long, FII short, DII short and DII long. Just a second. Yeah. So again we can see all 4 of them, okay. So as you can see here that we are seeing DII short in green, we are seeing FII short in grey, and we are seeing FII long in blue, and we are seeing DII long in purple or lavender. So you can see that DII long so we are not seeing in the past 2 months, okay. So you can see past 2 months, the past 3 months we are seeing, you can see DII is not buying at all, okay. Whatever buying we are seeing is by the FIIs, okay. So you can see the FIIs are buying a little well. You can see very good quantities of buying we can see by the FIIs, okay. So FIIs are buying a lot, but again with that you can see that DII is shorting as an overall in the stock. So whatever you are seeing the stocks which went down, or when the stocks we are seeing the prices going down, you can see the DIIs or the domestic Indian institutions are selling, okay. That is why we have seen a downward momentum in the stocks. You can see the selling is gradually increasing, okay. By till date if you are seeing, we are seeing the selling is increasing by them, and the FIIs are trying to cover those and they are trying to buy them. Similarly, if we talk about the FII short, so you can see FII selling here a little by till here. But again, if we talk about the main criteria, you can see that the selling in the stocks are there due to the DII selling, okay. Now if we just take up the chart of Nifty, you can get an idea that, you know, basically if we just take the future data, okay. So we'll take past let's just say from April, okay. So we'll just take last 6 months data. So you can see the past 6 month data. If you can see, we are seeing FII long and short, okay, and with that you can see we can put FII long, FII short, DII and DII long. Just a second. So you can see, if we take an overview, the overview is suggesting you that the FII selling was heavy in the index in the past 2 months, okay. So past 2 months, if you see, the past 2 months was indicating you that FII was selling heavily. That is why we see a fall in the particular Nifty. So we can just identify the dates also. So it is around mid October, from 1 to 14, between 1 to 15 October. And before that you can see FII long. So FII was buying earlier. So you can see the FII was buying. So we see a good hike in the price. So from August to October we are seeing buying, and from October to December we are seeing selling. So now we'll just take the example and we'll just check out in the chart. Yeah. So I'll put it to day wise. So as you can see, from August we are seeing FII buying. So you can see from August we are seeing this, And as I said, in mid-October, the FI started to sell. So somewhere from here, no, sorry, just a second. Sorry. Yeah. So we are seeing buying from August. Okay. So August we are seeing buying. So this is you can see from here, we can see started buying had begun. And from here in the October mids, as I said, from October 1st to 15th, between this range, the selling had begun, and you can see from there, you can see a downward trend. So by identifying the participant data also, you can identify the trends of the market of the stocks. So this is very important to identify. As I said, the systematic risk, to avoid the systematic risk, you need to check this data. And as you can see, it is available on Quantsap and you can access it easily, right? So I hope you got the concept. Thank you so much guys for watching. Now, if you have any kind of views, you can drop it in the comments. Do like, share and subscribe for more such videos.